In this video, we will talk about supports, resistances, and breakouts. How do you know if price is about to break out of its range? There's a very simple yet very effective strategy that you could use. Watch this video to find out. First, let's talk about support. Support is the price level at which buyers are expected to enter the market in sufficient numbers to take control from the sellers. So this is the price where there is high demand. This is the area where price rebounds. What is resistance? Resistance is the price level at which sellers are expected to enter the market in sufficient numbers to take control from the buyers. In this red resistance area, there is high supply for the security. Those who have previously bought the security tend to sell their stocks at this area. This is the common area where price drops. So we are seeing two important characteristics of markets. First, the market has long memory. It references historical support and resistance levels. The second is role reversal. When resistance is broken, it becomes support. When support is broken, it becomes resistance. What are the indications that price is strong enough to break above its resistance level? We need to know three things. First, where is the midline of the range? Second, is price above or below the 20-period moving average? Third, is there a bullish pattern forming at the resistance area? So when price starts to trade within a range, we need to find the swing high and the swing low and then the midline. So to make it easier for you to find the midline, you can access the Fibonacci retracement tool and choose the settings 1.5 and 0 so that only 3 lines appear in your chart, and then drag that between the ranges from the swing high to the swing low. So the price that lands on the 50% retracement level is the midline. Now once price starts trading above the upper half of the trading range, we look for higher lows. We also see if price is above the 20-day moving average. If price is above the 20-day moving average as it approaches the resistance area, then you have a higher chance of a breakout. If it starts moving below the 20-day moving average, then we will expect more sideways movements to come. Now once we've established that price is trading above the midline and is also trading above the 20-day moving average, we see how price moves as it oscillates around the resistance area. Is the demand strong enough to cause a breakout, or is the demand weak that sell down will eventually occur? If you see a bullish pattern like an ascending triangle or a bull flag or a bull pennant forming at that resistance area, then the chances are higher that there will be a breakout to the upside. In this case, what we have is a bullish ascending triangle pattern. If you see a bearish pattern at the resistance area, better wait for that bearish pattern to be invalidated or wait for a proper breakout before you enter. So obviously the bearish scenario did not happen. The bullish breakout was supported by the 3 elements that we discussed earlier, and finding out these 3 elements allows you to prepare for the breakout. Here's a bearish scenario. Price started to range after Tesla hit a high at around 900. So we measure the swing high and the swing low, and then we find the midline. Is it trading above or below the midline? It's trading below the midline, which means it is bearish. In addition to that, price is also trading below the 20-day moving average. So as it approaches the bottom of the range, price is testing support. It formed a bearish pennant pattern. The bearish pattern at the support resulted in a bearish breakout that caused Tesla to retrace further downwards. So let's look at the chart of Tesla. This is the 4-hour chart. As we all know, price broke above its previous high recently. So before we look at the latest breakout, let's go back to January to March 2020 when Tesla ran from $70 to $200 and then dropped back down to 70 to form a range. Previous resistance become new support at 70. So let's measure the width of this box. Let's go from the bottom to the top. So what do we notice at this area here starting April 2020 onwards? At this area above the resistance point, we see price coiling. So this is an ascending triangle pattern at the resistance area, which tells us that price is really bullish. So we have three things. We have the moving average trending above the 20 MA. We have the price trading above the upper half of the range. And then at the resistance area, we see a bullish pattern forming. This is an ascending triangle pattern that tells us that buyers are continuing to buy up the price because the lows are getting higher. So it's forming higher lows at the resistance area. And price is getting squeezed. So what happened afterwards was a breakout to the upside. Price again trended above the 20 MA and then it started consolidating. So we look at that range again. We measure from the bottom to the previous high. We find out where is the upper half. So we have 306 here. Once price started to trend above the upper half of the range, it is time for you to take notice because it is also trading above the 20 MA line. So you have two things. The 20 MA is pushing prices towards the resistance line. As long as price is above it, the likelihood that there will be a breakout is really high. At this point, we see that this is the previous resistance, which had to be broken. This candlestick broke that previous resistance. Again, it formed higher highs and higher lows. Now again, we go to the next pattern. Price started to create a range again. So for example, you're just here. You don't know what happened here yet, right? So price just broke out. What will you do? This is the previous resistance. It turned into support. If you look at this low here, it referenced that previous resistance that turned into support. So we measure a range based on this. This was the bottom. This was the resistance area, the breakout point. We use the bottom of this range here, which we defined as the new support. And this is the new resistance. And as soon as we find that price is starting to trend above the upper half of the range, we see this happening here. It failed somewhat, and then but it was able to recover above that range. And then from then on, price started to trend above the 20 MA line. And then what happened at the upper part of the range once again? There was a very short consolidation period. Prices started to form a flag pattern. Again, this is another bullish pattern. So again, price made another breakout. And then it made the consolidation here again. Again, we draw a range from that low to that high. What happened here? Price started to trend above the 20 MA and above the half of the range. And at the breakout area, we see another bullish pattern again. This ascending triangle pattern. And then price also consolidated above that resistance area. When price broke above the previous high, it retested it here and also formed a bullish flag. Price trended above. This was in February 2021. So price made a high at 900 and then pulled back towards the 785 level. So you have this range here again. We measure the range. If it's trading in the upper half, then the bulls are in control. If it's trading at the lower half, then the bears are in control. So what do we see here? The bears are in control because price is trending below the half of the range. And it's also trending below the 20 MA. So what happened? Price broke below the range. This is a very big range. So we measure from here, this bottom to that top. So price tried to break down here. But the bulls were able to successfully bring it back within the range and also above the 20 MA line. So again, even if you get whipsawed here, you ended up selling your shares, no one can blame you for that because this is a sign of bearishness. The fact that price is trending below 20 MA and also broke below the range. Your plan of action is, of course, just to get back in once it goes back inside the range and then moves above the 20 MA. So we just follow the price action. We can't tell price where to go based on what we think. We only follow the price action. So what happened here? price started to trend above the 20 MA. But if you're a range trader, this would be a good place to enter because you'd be just trading the range. But if you're looking towards a breakout, if you're a breakout trader, you will wait for prices to move above the 20 MA line and also above the upper half of the range before you actually get in. This is the upper half of the range. This is 682. There's a bullish pattern forming at the resistance area. Once again, this is an ascending triangle pattern. So what happened afterwards? There's a breakout. It also break above the previous high with a gap up. So there's no range yet forming for Tesla at the 4-hour chart. So we're just following the trend here. Just follow the trend above the 20 MA line. Again, you know the signals. If price starts to range, this means that there is profit taking, and swing traders are picking up the shares from the bottom of the range. So once the range starts forming, we measure the top and the bottom of the range again and find the middle. If price trends above the middle and above the 20 MA and then forms a bullish pattern at the resistance area, then there's a higher likelihood that price will start to break out. Thank you very much for watching this video. If you find this video helpful, kindly like and subscribe.